Hi, I'm Jesse Baines with Yahoo Finance Canada. Welcome to today's episode of Editor's Edition. Today we're talking real estate during COVID-19 with our guest, John Pasalis of Realosophy Realty. He's in Toronto. Hi, John.
Hello, thanks for having me.
Thanks for being here. And in Vancouver, we have Steve Saretsky of Oakwind Realty. Hi, Steve.
Pleasure. Thanks for having me on.
Thanks, guys. So let's start with Toronto. John, it was another record-breaking month. If we take a look at the numbers out of Toronto, sales up 42.3%, prices up 11.6%. Are you surprised September was so strong? I mean, it's hard to be surprised at this point considering how strong this market has been during a pandemic, but are you surprised September was so strong?
Yeah, definitely a little surprised. I mean, June, July, August, strength was not entirely surprising because that was sort of the rush back to the market after the shutdowns in April, May. But it is a little surprising to see that pent-up demand spill over into the fall market. So September stats, which you posted, are really strong, but we're going to even see really, really strong sales statistics for October once those numbers are released. And again, I think it's really fascinating to see this really pent-up demand spill over into the fall market to see just strong sales growth over last year.
Okay, so Steve, in Vancouver, if we take a look at the numbers there, we have sales up 56%, price up 5.8%. Are you surprised that September was such a strong month?
Yeah, I mean, I think that everybody's been kind of surprised about the resilience of the housing market during this, recession/pandemic. But yeah, if we look at, again, it's kind of similar to what John said. It's a tale of two different markets. So you have the suburban single-family housing market, which has been red hot. That seems to be driving most of the growth. And then you look at the downtown condo market, which is really, not performing well at all. So kind of two different markets. Again, looking at the October sales figures here as we record this, we should be setting up for another really robust month of October. So that sort of pent-up demand is continuing here and towards the end of October. So again, certainly surprised about the resilience of the housing market, but that's kind of where we're at today.
So Steve, that's the keyword, resilience. Just to follow up, it seems, and a lot of people get the feeling that Canadian real estate, at least in Vancouver and Toronto, the big markets, is indestructible. What do you say to people that have that sort of mentality that nothing can stop Canadian real estate in Toronto and Vancouver, not even a pandemic, and they're going to continue to view real estate as I mean, buying a home to live in is a different story, but as in terms of an investment that they just can't go lose. What do you tell people?
Yeah, I think that's a really good point. So I actually brought this up on Twitter yesterday and took some flack for it. But basically, I think that what policymakers have done, again, you can agree with the policies or not, but they have implicitly supported the housing market through and through over the past 2 decades. So when I talk to clients and they look back and they say, well, look at the financial crisis, 2008, 2009, Vancouver real estate, relatively unscathed. 2000. Now here we are during a global pandemic / again recession, and people are saying, well, again, everyone was saying the market was going to fall significantly, and here we are, prices are actually going up. So it seems like I can't lose, and I think that's giving people the green light to speculate further. And again, you can agree or disagree, but obviously the policy measures that have been brought in place through the Bank of Canada, through the federal government. There's an implicit backstop on Canadian housing, and it's gotten to a point now where obviously it's so large that I think policymakers are almost inclined to support it. And again, I think that's going to create these speculative feedback loops where even in the worst of times, it seems like prices don't go down. So that's kind of more of my concern longer term, is that there will be repercussions for these policy measures, and I think that that's going to be one of them.
John, what's your message? Vancouver did have a correction along the way. More parts of Toronto did as well, but Toronto's been relatively unscathed over the past few years. What's your message to people that do think that the government and other forces are giving them a green light to speculate, or that this market just can't lose?
Yeah, I mean, I think people are taking the wrong message, I think. I mean, I think it's easy to come to that conclusion when you see prices rising. But the fact is, this is I'd say it's a very atypical recession in the sense that, when we look at a lot of the job losses, they were disproportionately among renters versus homeowners. Typically, if we have a recession, we expect obviously a lot of homeowners to be impacted, which is usually what puts some downward pressure on prices. But it didn't fall out that way. I mean, it just ends up that this recession, renters were disproportionately impacted by the slowdown in our economy. And we're seeing the effects of this in the condominium rental market and the purpose-built rental market. So prices there are falling. And again, I think this is a bit of a challenge that we probably will see decline in prices in the condo market. So we can't just turn around and say, well, prices never fall. I mean, low-rise prices fell in Toronto and the suburbs in 2017. Condominium prices are starting to fall now. And again, I think it's going to be time will tell how big of a decline we end up seeing in the condo market. But certainly, I mean, we can't just conclude prices go up forever. I mean, the market is going to respond to slowdowns. It just happens that right now the slowdown happens to be focused on the condominium market, not on the low rise. Okay,
so Steve, I'll start with you. Recent report from Royal LePage, which we covered. If you want to do a search on that. The argument was that personal savings rates are so much higher right now because people aren't traveling, they're not going to bars and restaurants, and that is a factor behind the strength. Do you buy that argument?
I don't know how much additional, savings that's going to create in terms of trying to save up for $1 million house. I mean, you're talking $20 here, $20 there. So, I'm not necessarily convinced that's really the driver. I think ultimately is people feel like they're reprioritizing their housing situation, and the fact that we had this health scare, and I think people are saying, wow, why was I delaying my purchase? Why have I been renting, or why have I been holed up in this, small condo? Why don't I just go and enjoy life today? Life is short, and it seems like everybody seems to be willing to take on a bigger mortgage to get the house they want at a time when there's so much economic uncertainty. So it's certainly surprising, but that seems to be the human behavior. I don't necessarily think it's because you're not going on a vacation, you're saving, $2,000 or $3,000 that all of a sudden you can afford to buy $1 million house. I don't necessarily think that's the driver.
John, what's your view on that argument?
Yeah, I mean, I completely agree with Steve. I mean, the savings rate is not really driving what we're seeing in the market right now. At the end of the day, it's a combination of just behavioral shifts, people wanting more space, moving out of the city, and kind of touching on what Steve said. I mean, the really low rates are pushing some buyers to the market. The dream home is suddenly a little bit more attainable when your mortgage rate is 1.7% rather than 3.7%. And even though qualifying rates, like with the stress tests, haven't changed, at the end of the day, people's carrying costs are a lot lower. So I think that's really definitely fueling a bit of the demand that we're seeing right now.
And John, staying with Toronto, there was a bit of a dip in parts of the market in the 416 toward the end of September, right? Do you think that, and this is something that I talked with Scott Ingram about during those record TREB numbers that we were looking at, the end of the month was a bit weaker than the beginning of the month, right? So do you, in parts of the market, but do you expect the run to end in October, or do you think that we're just going to keep going?
No, the market's still going to be strong in October statistically. I mean, what we're seeing in Toronto in the low rise, like the single family home market, in some parts is a little less competitive than it was 3 months ago. There's just a little bit more inventory. Bidding wars are not as competitive, but it's still a seller's market. It's still very busy. And when we look at the sales statistics for October, see probably is that sales for houses are going to be probably up around 40% year over year. Sales for condominiums might be up around 5%. So it's still a strong market, but again, largely driven by strong demand for single family houses.
Okay, and in Vancouver, that that face ripping rally that you called for famously, Steve, is that going to happen? Is that going to take shape next month? Is October going to be a sore month, or is it going to take months to come to play?
Yeah, I think for sales figures, you're going to see both levels. You're going to see sales figures come in around 2015 levels, which if you're following the Vancouver housing market in 2015, that was one of the years we've seen since 2009, actually, in terms of sales volumes are going to be really, really high in October. Inventory is still low. I mean, again, for September, for single family, we had a 15-year low in single family inventory last month. So that is not going to change in a month or 2 months or 3 months. Like if you're going to see an inventory build, to go from a 15-year low to even a normalization could take you at least minimum probably 8 to 12 months. So it's hard to imagine a scenario where there's suddenly going to be, going from bidding wars in the single family housing market to all of a sudden, a slow down cold market and prices leveling off. So my concern about, I talk about a face ripping rally. I see that more heading into the spring market of next year. I think that typically, the housing market tends to slow down in December, January for seasonal purposes. But I do have a concern that, well, if we go into the spring market with mortgage rates at 1.8% on a 5-year fix, and let's say a decade low in single family housing inventory, I think that could create a potential scenario where, again, since COVID, we've seen single family house prices up 10%. Now, again, you can't paint the whole market with the same brush. We know that downtown condos are probably down 10%, and the inventory is building in that market. But overall, it is a pretty robust market outside of the condo market in the inner city.
Okay, that's a good segue to the next part of this conversation, this urban exodus that we've been seeing. And if we can pull up, there it is. One of the big stories of this market has been this urban exodus. And this is a map that Daniel Foch created, cool stuff on there as well. So what we're seeing here is 211 homes sold on a single day, and the distance that sale was from the realtor's office. So you can see all these arrows, so red, you can see Toronto, all moving out of the city, out into the burbs. And even we're seeing people that lived in Guelph, they're going up to Shelburne, and people from Mississauga, Cambridge. So how has this trend accelerated, or has it, since we last talked, John?
Yeah, I mean, the urban exodus is still going on. I mean, it's certainly still a big trend. We're seeing a lot of people, again, moving from smaller downtown homes to I don't want to even say the suburbs. I mean, it's really outside of the traditional Toronto area. And again, I think it's a combination of people just want a little bit more space. And interestingly enough, just some people wanting to just downsize financially, just don't want as big of a mortgage. They're finding that for even a little less money from what they're selling their Toronto homes for, they can get more space and be a little bit outside the city. Again, part of this is just with the expectation that people will keep working from home. And I think for some people, I mean, that may be a challenge in the future. Again, if their employers aren't fine with that, they might have a hard time finding jobs in some of these rural communities, but it's a trend certainly we're still seeing right now.
So, John, that's a question I wanted to ask you, actually. When you're dealing with clients who are willing to leave the city because they're working from home, how confident are they that they can continue to work from home? I'm working from home. My boss might say, that's it, come back to work when this is all behind us. But I haven't sold my house or broken my lease or okay, so we're looking at 1.9 million Canadians working from home. So that's a big jump, obviously. Pre-pandemic, it was 1.9 million. Right now it's 4.2 million. So significantly more people, John. Yeah. But how many of these 4.2 million people are confident that they'll continue to work from home and uproot their lives?
Yeah, I mean, it's a great question. I mean, we're finding just in our office anecdotally when we speak with our clients, a lot of our clients, one of the two income earners in a household was always able to work from home. So COVID has just made it a little bit easier for that second person. I think that the people who are making smart decisions are speaking with their employers, kind of come up with longer term plans. But, we do hear stories of people just rushing and buying without necessarily consulting their employers. And I think those people might have a bit of a challenge in the future. So I think some people are definitely making very rushed decisions. And I think those are the ones that might have a harder time in the future if their employers are expecting them to come back to work and they might be faced with really, really long commutes.
Thanks. So Steve, what is it like out your way in Vancouver, this whole work from home trend?
Yeah, I mean, I think that people are certainly extrapolating the recent shift to work from home and the belief that, well, I'm going to continue to work from home. I've heard people say that they're never going back to the office again. I think that, in my personal opinion, I feel this is a little bit short-sighted. I think that people will go back to the office. I think that, again, maybe it's not 5 days a week, but maybe it's 3 or 4 days a week. And I mean, we have Amazon here setting up, I think, 6,000 massive new offices downtown, 6,000 new employees supposed to be coming to the downtown location. So I don't think that's necessarily changed. I think that people are obviously extrapolating recent trends due to a pandemic, but it'll be interesting to sort of see in 12 to 18 months, once things hopefully get back to more normal, if people are going to be satisfied with some of these changes.
So okay, so we've looked at these sales numbers in outside of the city. If for sales to increase, you'd have to have two sales. So I guess what I'm trying to ask is it renters that are now buying and getting into the market, or is it more, are people actually selling their homes in Vancouver, in the core of Vancouver, and then moving out to the burbs and buying a home there? Or sorry, I shouldn't say burbs, outside of the city, as John pointed out.
Yeah, well, what we're seeing here predominantly is all end user driven. So it's yes, I personally have a lot of my clients that have been renting and have now taken the plunge and bought. We're seeing more, obviously, suburbs, but so we're seeing a lot more renters just moving in. But also at the same time, I'm seeing some condo owners selling downtown, selling their 2-bedroom condo for, say, $1 million, moving to the suburbs, buying a house for 1.3, 1.4. I mean, again, some of these houses at 1.4 will have a basement suite, so that's a mortgage subsidy right there. And so that seems to be the main driver. I mean, even if we look at the September statistics, is if you look at detached houses flipped within a 2-year period. So detached houses bought and resold within a 24-month window. That's collapsed to almost 20-year lows. So it's not like the speculative fever where all these investors buying houses, flipping them, and everybody's kind of speculating. It's really just end users that want more space, and that's really the predominant buyer in today's market.
So, John, what's the situation like out there? Are people actually selling their condos and buying a detached home in Durham or whatever the market would be, or is it, what's going on?
Yeah, I mean, it's very similar to I think what Steve's saying. It's predominantly end users that are driving the market. I would say largely existing homeowners, whether it's people selling their condominium downtown or people selling their smaller semi downtown, moving out of the city. Certainly, of course, there are some first-time buyers who are renting, but a lot of this move outside of the city probably is predominantly existing homeowners, whether they own a condo or whether they own a home. And some of them now owners. They bought their homes trying to sell their condos, and some of them are having a harder time because the condominium market has slowed down quite a bit. And
we're just so everybody watching it, we're actually looking at some numbers here to show how the condominium market is struggling. Some recent numbers from Treb showed that rents are down 11% for a 1-bedroom. For a 2-bedroom, it's down 9.2%. And listings for rent in Q3 up 113.9%, John. So as you say, the condo market is facing its challenges, right?
Yeah, absolutely. And if we look in and we zero in on downtown Toronto, the numbers look even a little bit worse. Those are GTA numbers. Downtown condominiums have seen a much bigger increase in inventory, a bigger decline in rents. And we're starting to see some cooling in prices. I mean, it's not coming through in the real estate board's GTA statistics because it's largely a really downtown phenomenon where we're starting to see some downward pressure on prices.
And is it all types of condos? I know the micro, the so-called shoebox condos have been under pressure, but are the higher end, like the Yorkville, the bigger condos that are suitable for families, are those facing the same troubles?
Yeah, no, I'd say the bigger condos, like the two bedrooms, bigger units, especially if they're in smaller buildings, they have terraces, like certain buildings and units are doing better than others. So again, you can't really just say it's a condo thing. It's probably building specific, unit specific, but certainly if you're of a small 500 square foot condo in a newly completed building and there's 50 other similar units for sale or for lease, I mean, that's a really tough market to be in. So certainly the bigger units and smaller buildings are doing a lot better than than the small units.
So, John, are you finding that people who do want to make that move, they've already committed to that move to buy a house outside of the city, but they've already made the purchase, but the condo isn't going to sell for what they expected it to do? And if you could talk about, in a situation like that, is it wise to ever buy a home before you sell the one you're in now?
That's a great question. I mean, buying a home first and then selling has been the norm in Toronto. Probably not the smartest thing always, but has been the norm because it's so tough to buy a property in Toronto and it's usually pretty easy to sell. But it's a terrible decision when you're in a recession, a pandemic, because things can change really anytime. And a lot of condominium buyers are finding now that it's a really tough market to sell in. And the problem with this, of course, is for most home buyers, they need to sell their existing home. So if they've committed to buy a home and they can't sell their current condominium, well, they're going to default on that purchase. They might lose the deposit. They might get sued for whatever losses the seller incurs. So there's a huge risk when you end up buying a property without selling your current home. We're recommending that people should be selling first, because your worst case is if you can't find a home fast enough, you just end up renting something short term, which is not as bad as getting sued for tens or hundreds of thousands of dollars.
Yeah, that's some good advice. I hope our viewers are taking. Steve, in Vancouver, there's been a lot of headlines about Toronto's condo market. What's Vancouver's condo market looking like these days? Are we seeing a similar trend?
Yeah, it's pretty similar. I mean, it's not like, again, you can't compare this to like the detached housing market. We're not in a market like 2016, 17, where everything is going up in a straight line. Condo market is highly speculative. What we're seeing today is the condos that are moving, they're moving, bigger units are moving, especially with outdoor spaces, particularly out in the suburbs. That stuff's moving okay. It's moving, decently well, but the stuff that's really getting hit hard is condos in the inner city, where a lot of them are rented out. I mean, downtown Vancouver, you probably have 50% of the market is rentals. So when the rental market softens as it is, then obviously the investors are taking a hit. So we're seeing higher vacancies. Some of these units that are becoming, where the tenant moves out, the owner is just deciding to sell, for example. So that's just adding to more inventory. And we're still seeing some weakness in the pre-sale condo market as well, because it's not a speculative market today. It's not an investor-driven market. And so the investors who are typically buying these pre-sale units are just not active today. And so it's a very interesting market because there's so many moving pieces right now that you can't just paint the market with a broad stroke and say that everything is, it's so segmented today.
And just generally, Steve, are condo investors sort of screwed in Vancouver?
I think downtown right now for sure. I mean, again, you're looking at rent probably off about 10%, let's say. We've had some issues recently with insurance premiums going up, which is resulting in higher strata maintenance fees. So, investor of a condo in the inner city, it hasn't been very pleasant over the past 6 months. It'll be interesting to sort of see how long it takes for that market to recover, once this pandemic subsides and you get some immigration, people traveling here. But certainly right now, it's under quite a bit of pressure.
Okay, speaking of pressure, John, how much has the lack of immigration, how much pressure has that put on?
I mean, it's certainly a big factor. I mean, non-permanent residents in particular was one of the big factors that was driving demand for condominiums. And of course, students. I mean, a lot of students are not living here to go to school. They're staying from home, studying remotely. I think all of these are definitely putting some pressure on the demand side of the housing market. But again, I think the biggest factor that we're seeing on the ground now is that just the biggest decline in demand is just people who already have renting condominiums who are deciding to just move out of them and either move out of the city or move back home with family. And that's the biggest factor right now that's leading to this big surge in condominiums that are available for lease. Because when you look at the number of leased transactions, they're actually up over last year, right? So on the surface, it looks like things are fine, but when we look at the data, it's not. What's happening is a lot of people are just moving out of their units because they can't afford them. They lost their job. They're moving in with family. And that's where a lot of the pressure in the condominium rental market right now.
Is that the same pressure you're seeing, Steve, in Vancouver?
Yeah, new household formation, right? I mean, in a recession, unfortunately, I think it's a lot of the younger generation, the millennials and stuff, that have been probably most impacted in terms of job losses. So I'm certainly seeing some of them moving back home, right? Save some money. You're looking for a new job. So that, again, that new household formation starts to slow at the same time when immigration pulls back. I think that's why you're seeing more weakness in the rental market. And again, as an investor, investors were driving a good portion of the condo market. When an investor looks at it and says, well, hold on a second, my rent's on, let's say, 10%. It's a little bit harder to fill a vacancy. So instead of maybe I can fill it in 2 weeks, it's now taking me, 4 weeks or 5 weeks to fill a vacancy. You need to be compensated on the price to adjust for that risk. And so I think that's what them are looking at it today. And so that's why I think we are seeing some pressure on the condo market, despite headline shows that sales are up, and they're up quite a bit. But I think when you actually do a deep dive into the numbers, it doesn't really tell you the whole story.
Right. And I think it's no secret that the detached market is the strongest of all. So what's that looking like, John? Are the bidding wars subsiding? Is it as strong as it was a couple of months ago?
I'd say for the most part, it's a little bit cooler than what it was. But I mean, that doesn't mean it's a cool market. We just went from, in the summer, houses were getting 10 to 15 offers. Today, they're getting 2, 3, or 4, or 5. So it's a little less competitive, but it's still a very good. Areas in the suburbs of Toronto are still very busy. Durham region which is just east of Toronto, is probably the hottest region right now. It really wasn't, but it's the hottest probably right now because it's the most affordable region in the GTA. So again, a lot of people who want bigger detached homes, I mean, that's where the most affordable detached homes are. So it's a very competitive market in Durham right now.
Steve, what about in Vancouver?
Yeah, it's kind of a similar thing. I actually track the percentage of listings for single family houses that sell above the asking price. And so we're seeing that number steadily increase over the past 4 to 5 months. I think in September, that number was about 27%. So 27% of single family listings sell above their asking price. I think that number so far in October is around 29, which, historically is a fairly strong number. So we're still seeing a very competitive single family market. And again, agents know, right? When you have the demand and they're confident that you will get multiple offers, you tend to start to see them push the asking prices down in order to drive multiple offers and to drive the price higher. So activity is certainly what we're seeing right now.
And really quickly, Steve, so if people want to avoid the bidding wars, are they better off buying new builds?
Yes. Typically you don't really see that in the new builds. The thing in Vancouver anyways, is we don't really build a whole lot of new single family houses. We don't have new suburbs being created in the greater Vancouver area. So the supply of single family houses over the years continues to shrink. What we're actually doing is building up and not out. So the pre-sales or new home construction is predominantly in the condo and townhouse space, not in single family. So you're kind of stuck for the most part in the resale market.
Right. How about you, John? What's your advice to people that just want to avoid that altogether in the GTA?
To avoid the bidding war, I mean, the best way to avoid bidding wars is to look for value. I mean, which generally means looking at the homes that don't look the prettiest. I mean, at least in Toronto, it's somewhat predictable which homes are going to get 10 plus offers even today. And they're the homes that are staged the nicest, have rented modern, cool furniture. And that's what gets the most offers. And usually they sell for more than what they're worth. And the best way to find some value, at least in Toronto, is to look at the homes that don't have the nicest photos. You know, a home that has good bones maybe needs a little bit of updating, but you're going to get way fewer offers on those properties and probably going to get a lot more value.
Great. Okay, thanks so much, John and Steve, for joining us.
Thanks for having us.
Yeah, thanks. It was good chat.
And be sure to follow both John and Steve on Twitter. They put out all kinds of stats, valuable insights. Give them a follow, and be sure to check out Yahoo Finance Canada. We'll have all kinds of stories keeping up with these crazy real estate markets during these unprecedented times, the stocks, the economy, you name it. And give me a follow if you have any questions for these guys, or there's any topics that you want us to cover in future shows. Thank you.